Jenny Horne, host of Next Gen Investing, is with us, and we're going to dive deeper into the Target story, which has been down double digits this morning. Let's hear more about this. Good morning, Jenny.
Yeah, good morning, Nicole. And unfortunately, not such a great morning here for Target, as we are seeing a pretty significant move to the downside after already having been beaten up pretty substantially over the last several months. So part of this is the fact they did name a new chief operating officer, or the previous chief operating officer as now their next CEO. He will be succeeding Brian Cornell on February 1st. So that is going to be a rather, not quick turnaround, but that will be a major leadership shakeup. And perhaps that's part of the pessimism this morning, is that right now we're pulling from basically an internal, obviously executive. Perhaps the thinking is it's not going to be enough of a change for a retailer that has made a lot of very Target-specific missteps, frankly. He will be stepping into the role as the company does really try to win back both its customers and investors after years of really stagnancy in their sales, as well as some pretty steep market share losses. I did check, though, because we do see oftentimes, like massive moves, like Brian Nickel, for example, as we saw him, of course, leave Chipotle, which he was coined as like the turnaround king, moving to Starbucks. We saw then Starbucks surge, Chipotle sell off. So I did look at historically what this means, and it can mean that we could see some near-term volatility for the stock, but it doesn't necessarily indicate negative, perhaps. And so I think that can be attributed more so to the fact that its earnings were disappointment. It did stick by its full-year outlook, which is probably the brightest takeaway of this entire report, but is forecasting, though, another sales decline, so not really an improvement per se. Target shares dropped as much as 11% this morning, though, after this announcement and the results were released. And before we saw this choice was unveiled this morning, Wall Street appeared to be in favor of an outsider for that job. So looking at their annual revenue, we have started to see, contraction now if you look at just the last several quarters, but also the contraction is starting to moderate, where we're not seeing the same degree of sort of weakness that we saw 2 quarters ago. But right now they are stepping in with real urgency, was what this press release said, to rebuild the momentum and return to profitable growth. So under this new leadership, we are seeing these 3 major goals established, really reestablishing their reputation as a retailer with stylish and unique items, providing a more consistent customer experience, and using technology more efficiently to operate their business then more efficiently. So that is all good and well, but I think that you have a lot to prove when you come into a company that is seen flailing results consistently like Target has.
And it's amazing because they did have stronger earnings, but the stock has been down because they're bringing in, obviously, someone from the inside. As you noted, people were thinking they would go to the outside for new leadership. We've had Michael Fidel been there a very long time in different roles. You mentioned chief operating officer. I think he had a CFO role. I think he was an intern at some point. So he says that his time at Target has been an asset, but we'll have to wait and see whether or not he's really going to make some changes. I know the company had mentioned a repurchase program that they'd like to start in the second half of the year. We'll see if that, the stock has been depressed, so maybe they think they're getting it at a bargain. They want to do that. They talked about encouraging signs for back to school and things like that. So maybe there are some bright spots, but right now, down 11% seems it's pretty dramatic when you see that in the morning.
It is, especially because it's not like Target came into this report operating from a point of strength. And I know they've at least kind of made a recovery from some of their yearly losses. But all things considered, this name was, disappointing on the year, disappointing as we saw the back half of last year. And a lot of this is hard to, I think, necessarily blame entirely on leadership shakeups or tariffs. I feel like right now that's sort of the blanket blame for a lot of the weakness we're seeing, where maybe it's time to discuss, hey, your offerings right now are just not resonating with consumers. And talking to people that are these Target loyalists, many were very disappointed in the company's decision to roll back its DEI initiatives, but also a lot of their private labels, they were allocating their spending incorrectly, where then they weren't really prepared for a post-pandemic world. And we're still seeing the major impacts of that. So it goes to show brand loyalty is strong, yes, but it can be lost pretty quickly.
Yeah, without a doubt. Their Ulta deal falling through pretty much. I mean, that's sort of out. And they've also done a lot of promotions, which doesn't bode well for the company. I mean, inventory, I guess they just have too much of whatever. You know, when you're doing a lot of promotions, that doesn't scream, hey, we're in a strong position. Let's get to TJX, which had a beat and a raise, right?
Yeah, and so I think this is a really interesting story in contrast, because a lot of times we talk about, you know, the Target versus Walmart story or the Amazon effect. But I do think there's something to be said where, like, sure, Walmart does definitely operate in the overall bulk market share of the U.S. grocery business right now, which Target's trying to tap into further. But TJX right now also does compete with these home furnishings and, you know, candles and the things that I always think you never really necessarily need. But TJX has this treasure hunt element to its shopping experience that is seen as very value oriented, which right now Target has lost. So perhaps gaining some market share from those that have turned away from Target as of late, because their report was really strong. I mean, they beat expectations across the board for revenue and earnings. They did also raise their full year guidance, as the retailer really said they assume that they can help right now offset some of these higher costs from tariffs. So now expecting their fiscal 2026 earnings to fall between around $4.52 to $4.57 a share. That was up from its prior guidance. Also did raise its comparable sales expectations to up to 3%. Previously, it had been expecting about a 2 to 3% rise. So that's as strong as we've seen from really anyone. The new guidance is, though, assuming U.S. tariff rates do remain pretty much in place as they are right now for the rest of this year. But they highlighted that customer transactions were up at nearly every division. They highlighted this really strong demand, not only here in the U.S., but in parts of their international businesses. And right now, with really strong profitability, they're now raising their guidance to reflect that. And profit margins are also expected to only strengthen into the back half of this year. So, I mean, it goes to show the consumer is still spending. It's just allocating its spending a bit differently. And I mean, comparable sales have been a critical read this quarter. You have names like Lowe's guiding for at least some positivity for comps the rest of this year. Home Depot also up about 1%. And I mean, right now, well ahead of expectations, as comparable sales grew about 4% during the quarter. I mean, that is impressive when you consider they're also lapping a really strong fall and sort of summer season from last year.
All right. I mean, when you think about how the shopping has been going, we've also heard from Home Depot and some of the other retailers. Sentiment has come in a little weaker lately, but we're seeing the resilience of the consumer, and we have some evidence that people are willing to spend. They just pick and choose where they spend, right? Final thought?
Yeah, and I do think that we talk a lot about the stress of this consumer, but I mean, overwhelmingly so. I mean, retail sales have held up. A lot of these reports have indicated that, yes, there is this bargain hunting element, sure, to feel like you're getting a good deal, but spending really hasn't dipped overall. And I think that that's been a huge takeaway, a positive takeaway at that, of earnings so far.
Right. Jenny Horne, great to see you. Appreciate it. Key names to watch.